Hey, welcome back to the channel. So, ESS, a hard rock lithium project holding company in WA, home of hard rock lithium, went up 40% because a major player in the lithium market bought them out. The major player being, I believe it's a joint venture. It's a joint venture between these companies here. So that joint venture bought them out. That joint venture also owns 50% in probably the largest hard rock lithium mine in Australia with the highest grade, Greenbushes. So the big lithium company bought them out. Obviously won that 11 million tons. A JORC resource, not many of them on the ASX, not many of them, so 14 in Australia. So they're growing, but lithium, it's out there, but it's not easy to find. Yeah, so pretty fair value, I assume. Like they can get, if you do 100,000 tons of hard rock a year, you can make 100 to 200 million dollars in EBITDA. That's after you build the process actually, which will cost you 200 million as well. So you build it, you get that 200 million back, and then you print money for the next 10 years because the world is going towards electric vehicles, and lithium ion is a battery of choice for long range electric vehicles and shorter range. Until sodium ion probably comes in and might go for the shorter range and storage, but it's going to be a lot of demand for lithium. So now we'll go into other companies and where they rate against each other. So WR1, I sold out this company the other day. Thought it peaked. It went up again. You can't pick them, but 260 million, I believe, because they just bought out a drill announcement that was probably the peak, and they'll probably dwindle down. As I think they still will dwindle down on their way to going back up even higher. They should go to $1 billion to $2 billion because highly likely they're going to drill out their resource and so drill out their resource and get into production, meaning they could spend $200 million, build out the mine, and make $200 million a year. So that's the rough figures on that. So once they're making $200 million a year, they're going to be worth probably $2 billion, $1 to $2 billion, I assume. So highly likely they'll go into production. They're on the way up now. I think they will dwindle down as they go up again. They could bring out more SA announcements going up, but pretty rich valuation. But I still think it will go higher, though I sold out just to be on the safe side. So then they're 250. You got GL1, who's a bit high. Always look at the ASX, the market cap on this thing, because Google is often wrong. So they got WL1 is drilling out, definitely going to have a resource they just got to bring to the market. GL1 already has two resources, one at 20 million tons, one at 30 million tons and growing. So that's why they're worth double what WL1 is. So perhaps they're a bit rich as well, although they probably will go higher. They're the same story. They can spend $200 million and maybe make, if you're doing 200,000 tons at $2,000, that's $400 million EBITDA. So if it's basically you could spend 400 million and do 800,000 tons per annum, or you spend 200 million and do. These are just really rough figures. It's not going to be exactly that, though. Pretty much, end of story. You can print money with lithium hard rock. So what else can I say? So companies that are small that could reward you if they get into get closer to looking like they will get into production. This one, chance will get into production, I give about 30% chance. So why? Let's go into them a bit. So there's WR1, who owns Canset and Adina. Canset is on the highway with power going through it, so it's going to be cheaper to build that mine. Adina, they've got all the good drill results there, so it might be more expensive to build the mine, more OPEX traveling, but it looks like more grade there. But they both could get into production. So then you got Brisk, which is around here. And these guys, it's been drilled, they're going to assay it, so if the assays come out, they could shoot up from 20 million. So they're 20 million. WR1, who's definitely got it there, is 260 million. So if you invested in this company, pretty risky, but if they drilled and kept finding stuff, you probably will get rewarded, though obviously more risk for that reward, as you would expect. Then you got another company, CRR. They've drilled a few as well. They're in Canada, in Ontario. So if they got good drill results, they could follow and increase this. So again, it's already there, so less risk, but less reward because it's already quite a big market cap. This doesn't take into account cash and everything like that. So yeah, lithium, it's already high in price. So I believe the next thing to invest in will be natural graphite, because it hasn't hit the shortfall yet of natural graphite, which is expected to happen around 2026, which means graphite price will probably go up, which means companies that look like they're going to get graphite out of the ground will go up in price as well. So we'll just go through these slides, see if there's anything I can say more. So basically, low lithium, they're basically checking the ground to see where they're going to drill. They'll probably drill like later this year. They've already drilled some parts from the old miner. They've just got to assay them. If those assays come out saying there's high stuff there, could boost this from 20 million upwards, but high risk. WR1, they've hit huge grade. Big result, 100 meters at like 1%, even 2% for like 10 meters. So definitely got the lithium there. 200 million, they'll just have to keep drilling it out. To find that it's definitely there, get indicated. So you drill it once in an area, it's inferred. You drill it 3 times over, it's like, oh, it's definitely there, indicated. You do the feasibility study. So that's why I thought I was correct in selling out here, because good announcements come out. It's still going to be 2 or 3 years until they do the feasibility study, which I think it will dwindle down on its way back up. So I think it's rich for where they are in the timeline now. Is why I sold for them. We already done that one. So LLI used to be Mungo Gold. Briss, let's see. AS2, this is another one. So AS2, there's a person next to them who's already mining tin, and then is going to do the pilot plant to get lithium as well. So there's a company next to Sky Mills, can't remember what they're called. They're doing tin already in production, was going to be a great company. It has heaps of lithium, heaps of tin. So either the tin's free with lithium or the lithium's free with the tin. So Sky's drilling and might bring out drill results soon, confirming that the stuff was there, which I think it would be. So their probability, still coin flip whether they'll get into production, but because they're only 30 million, you will get rewarded if they do for the risk you take. So I've got videos on them. I think the video is called Mining Lithium for Free. Goes over them. So they're pretty decent. I like those. CRR, these guys have drilled and hit stuff. Just got to keep drilling and hit more stuff, I guess. Which you probably give them a 50% chance to get in production as well. GL1, chance to get in production probably 80%. They got 2 mines. So let's see, we'll go back up here. This one here, which I thought was going to be the best one, is actually now at 20 million tons, around that. This one's now at about 30 million tons. So the same amount of drilling, I think this one has grown substantially more than this one, which why this one might be the leading project. So once again, they can spend $200 million, do 4. Say they spend $200 million and do 200,000 tons per year. That's $400 million in EBITDA for a company you can buy now for $400 million. Take in mind they'll have to raise that $200 million, and who knows if lithium hits full throttle, they could open up this one and do the same as well. Do you think you'd focus on this one to start with? So they're around $400 to $500 million because they got these 2 projects. They're drilling this out more, so they'll get that from 30 million to more. They'll do the feasibility study, and this company will become a $1 billion to $200 billion. $1 billion to $2 billion company as well, I believe. So this is why I sold earlier on, because this is what I'm GL1. It got to this peak. When it got to here, I was actually wanting to sell, but because I hadn't held it for 1 year, I couldn't, and it dwindled right down again. So that's why I sold a WR1, but I knew it was pretty high up for where they're going to be. But I've still held them through this, and they probably will go higher in the future, I believe. Take in mind, share price and market cap aren't the same. So spodumene, it's known that everyone buys spodumene from China, so it's a known thing. You just have to look at PLS and other companies. So Mineral Resources, who owns this massive hard rock mine, bought into them as well. So it's confirmed these people know what they're doing with hard rock, bought into this company. So that's probably a bit of confirmation they know what they're doing. And some other Chinese company bought into them as well. So that's GL1. So that's it for this thing. Let me know if you know any hard rock lithium projects that stand out above the rest due to their price and the risk to reward of them getting into production. Love to hear it. And just what I love about this company is a strong team driven by ESG credentials. Strong pipeline of views, primed to be a significant global lithium company. So highly likely this will, if you have to bet your life on it, I'd say this will get into production for lithium. So that's it for this, and see you in the next video. Let me know any lithium companies you like, and that's it.